And joining me on the podcast and live on, well, it's not live. We are living people, but we're not live. It's on video as well. Alan Green, CEO of Brand Communications. Right, Al?
I'm very good, thanks, Jess. Yes, welcome to my newly refurbished office, and very glad I am too that it's all done. It's all white, as you can see behind.
It's like a doctor's surgery.
Yes, well,
Dr. Alan will see you now. Come
Dr.
in.
Allen will see you now. Indeed. Well, it's white, and we're big fans of white in this house. Just have nice white
what's that
walls.
picture in the background?
Well, it's actually a Spurs calendar.
All right. Do you know what? It looks like human body. It adds to the doctor's surgery feel. It looks from this distance. It looks like human anatomy.
Well, there's a Jackson Pollock there. You can probably see that, but that's that.
I don't want to see a Pollock cell.
That's another story altogether.
Yeah, well, that's it fits in with the doctor's surgery. Okay, please cough, sir. That's it.
Cough. Yeah.
All right. Okay. Let's not talk about that match in the weekend. In fact, my son went. He went to Arsenal, Spurs, Arsenal, and he missed out on his football game. Which is gutting because his team won 7-1 yesterday. So it's like he went all the way to London to see Spurs lose against Arsenal, and his actual team won 7-1. So you gutted, actually gutted.
I'm sorry about that. Yeah, well, I can remember when my lad was that age, and we were at football every weekend. There was the training on the Saturday, then there was the match on the Sunday, and we were actually running the club at this point. So it was really, from as soon as the season started, your weekends weren't your own. You were just dedicated to running the team. But it was a great time. It was a great time. So well, I think in future, tell him that his own football is more important than watching Spurs, because
don't tell me that. I had a row with the missus there. She said they're going next week. So he's not going to play his football. You can't keep doing this. They'll just not pick him anymore.
Yeah.
But there we are. There we are. We had a big row about it. But she seems to book tickets for him and not understanding of the game. Anyway, okay, let's talk about stocks. Big week this week, of course. The Fed maybe reducing interest rates first time since 2020, and hopefully it'll be the direction of travel for interest rates, which will help all equities. I mean, there can be volatility when the Fed first announces, reduction in interest rates. There's a bit of volatility. People just assume it goes up. It doesn't. But I think if you look at the last 5 times they've reduced interest rates over 3 months, the indices have been positive from when they reduce them. So it's going in the right direction anyway, hopefully,
It is. Well, I think that'll be highly symbolic, and I think it's been expected, it's been signalled, but of course there is a lot of uncertainty. Obviously we're in the run-up to the elections as well, but I think from an economic standpoint, if the US government send that signal out, they're confident in where the economy is. I mean, if we start talking about national debt, then of course it all goes out of the window, because they've got trillions and trillions and trillions of debt, the US government. But regardless of that, they'll just print more money. But if interest rates start coming down, then that's the feel-good factor will percolate through the market. We'll see, hopefully public spending will start to increase, confidence will return, and then that will have a knock-on effect and feed over into other countries too. It's been signalled that we may get an interest rate cut here before Christmas, although obviously Starmer is very he's blaming the misfortunes of the UK economy on the previous governments, and
I know he's got to stop doing that. He's got to stop being. I mean, in fact, it's
miscalculation. I mean,
many business lobbies now, they're lobbying him to say, "Stop being so gloomy. You're going to stop people investing in the country." You don't want to hear that from the leader. You could say, I said before,
they don't want to hear it.
You should have gone with, yes, there's a lot of work, but we're pro growth, we're pro business, so we welcome investment. You should have been a more positive stance. It's like, I don't really understand where, if he really wants to help the economy recover, you've got to inspire confidence, not just go gloomy. Oh, it's going to be painful ahead. What's that going to do? People are just not going to invest.
No, that's right. Yeah,
it's self-fulfilling prophecy. That. By the way, the American, they'll have to reduce interest rates soon. They are paying $3 billion a day in interest alone. $3 billion a day. That's phenomenal, isn't it? So you can see why gold's shooting up and all that stuff.
Yeah.
Stuff. Anyway, okay, let's look at companies, Al. What are you talking about?
Okay, so just we've spoken about this company before. Synectics SNX is the
Yeah.
Epic code. Very strong chart as well. Just looking at the chart here, we've had a really good start. I mean, December shares were trading around £1, and here we are now at £2.35, halfway through the year. So if you got in then, it would have been, you'd have enjoyed a very good run for your money. But one senses this is still just the start. So Synectics, of course, are a company that provides security and surveillance systems around the globe. Protects people, property, communities, and assets. And they have an online in-house platform called Synergy, which does the job for them. It's highly configurable and can be personalized and tweaked to suit different clients, different situations, and so on. The company is chaired by Bob Holtz, who he's of course been on the board of Revolution Beauty, SureSave, and of course Mears Group, very well known. Tragically, of course, a month or so ago, we lost Chief Executive Paul Webb. He suddenly died. So there's an interim CEO in place working through with the company, but the momentum of the company is unchanged, as can be seen. We had a very strong trading update when we first spoke about the company in June, trading comfortably in line with expectations. Then we had a $10 million contract win with a gaming resort in Southeast Asia. September 9th, that 10 million contract was increased by a further $3.2 million. $3.2 million contract win in addition to that 10 million. All of which means that the net result from current trading will mean that the company will substantially exceed its current or materially exceed its current market expectations. And that came, of course, with today's trading update. Very, very strong positive trading. Order intake is very strong. The company has won a further 1.2 million security contract in the Philippines. It's also added to contracts with Saudi Aramco. It's seen further contracts there, and also first contract win at a gaming and leisure resort in Cambodia too. So this company is just on a growth roll at the moment, and of course, when you're in that industry, you're dealing with lots of multinational companies. So if the solution is working in one company, that's a transferable skill set. So it's highly likely that we'll see further upsell from Synectics as we go forward. Company currently has a market cap of 41 million, and the previous year we saw a turnover of 49.1 million. So that's a very strong performance. So really, the current market capitalization doesn't even reflect the turnover of the company. So with that strong trading statement, we've seen the share price jump up a bit today, but even so, on the year, it's still an extremely strong performance. So yeah, I see more of the same here. I'm sure when the full year results come in, we'll also get a further update on current trading, and it's just going one way for this company at the moment. So yeah, good luck to those who are in, and congratulations to those who got on board around Christmas time.
Yeah, well, I've been talking about this company for a long time, and one of the reasons why is because I have what's called a microcap league. I rank all revenue generating profitable companies sub 100 million market cap according to growth, value, health, potential, momentum, efficiency, and this is in the top, I'd say top 5, and it's been there for a long time. And I said, it's under the radar. Everything is. I mean, there was very unfortunate about Paul, but he set the foundations of this company. I like to say, they've got many contracts happening. In fact, I did send out to my tips email list. I said, this is last night. I sent a text saying, we're at a very interesting point in the chart. If it closes above this, because it's been this range now since 24th of Feb. It's been a range between £2 and sort of 170, and it's been bouncing that. So if it breaks above that, closes above this now, because it's tried a couple of times, and sometimes your first attempts you don't get there. But I said we close above this, and they came out with this trading update today. So it did close materially above that. So we're now in a new uptrend, which is very good. And you can see there, the last previous uptrend continued pretty much. So the big rise happened there, 20% that day back in December on a good trading update, and it continued upwards. And so sooner or later it will get to a new sort of range, and it'll settle into that for a while. But
Mhm.
yeah, I'm very confident. It's got everything. It's growth, value, health, efficiency. Potential. It's got a lot. So I do like that. SNX ticker. Do your own research. What's next, Al?
Okay, so we've all heard about the big changes in Web3, well, the next stage of the internet anyway, which is going to be very much an internet that's governed by consumers and users rather than the big companies like Google and Facebook. So the issue at the moment is, of course, that cookies are dumped on your browser, and then those companies seek out your browsing habits, and they'll follow you around and they'll show you ads and push content out to you that they think that you want to see. Of course, most of us don't want this. We just want to be able to use the net to view what we want to view, and that's it. And the net result is that 90% of cookie data will be switched off when the switch up to Web3 occurs. Electric Guitar have a data investment proposition for this new era that we're moving into, which is people first data. So this is all about providing companies with a platform, which the company already has through 3Radical, which was the company that RTO'd into the market earlier this year. It IPO'd at 2.1p. We're currently trading at 0.6p at the moment, so we're well below that IPO price, which is baffling really, because the company has made an awful lot of progress since that time. John Regan is the chief executive, and I've spoken to John on a number of occasions, and also Richard Warboys, who is the chief operating officer. He's the two guys are driving this forward, and basically forming collaborations with companies around the world. The company has a number of client wins and announcements that has been made over the past few weeks. The company launched its Voco Solutions portal at the Digital or DMEXCO, which is the Digital Marketing Exposition and Conference in Cologne. The Voco Solutions portal, VSP, is an evolution of 3Radical's Voco platform, and what this is, provides businesses with a streamlined and rapid tool that can be deployed for customer engagement without too much delay. So it's all about companies being ready to engage with consumers and customers on their terms, rather than using the old way, which of course will be switched off very shortly. Since that time, the company's announced an agreement with Jewson. Of course, Jewson is the builders merchant and building products company. So Jewson set up a new sustainability-focused microsite, and that incorporates the Voco platform, so the company can engage going forward with its consumers, but its consumers control that relationship, which of course is critical in this. And most recently, Electric Guitar and Digital Alchemy are hosting a Singapore event to launch a collaboration between both companies, and their clients will be attending this. The company has many clients already across major brands across the UK, in the USA, and also APAC, and this is predominantly in financial, online gaming, and e-commerce. So it's very much a company of the future and for the next generation web. And there's a good opportunity at this price, 0.6p, to position yourself to take full advantage of this going forward.
Mhm. So are they generating any revenue at the moment or not?
The company is generating revenue. Yeah, we're going to get an update on trading and revenue generation. I would imagine in the next few months there's a trading update certainly due.
Okay. At the moment, it's a very hard environment. If you're like a loss-making company, it's very difficult. I think where it's at the moment is profitable companies, and so over the last 15 years, pretty much, we're in a low interest rate environment. It's very easy to raise money. Now it's not. So I would say, if you're investing in loss-making companies, two of the most important questions you should ask is, how much cash have they got? How long will it last? Do you know that with this company or not? Or do your own research, everyone?
Well, the company has cash from the IPO. The company came to market, raised 1.3 million at 2.1p. So the company has the company's not spent any cash. It's that money is just going
Not
on.
spent any cash. Well, how's it
Well,
operating then?
well, it has spent cash, but it's not spent cash on acquisitions. The acquisitions are collaborations. So going
Right.
forward, but the company is generating revenues from existing contracts already, and we're going to get an update on that. As I say, there'll be a trading update with numbers within the next few months. So certainly before Christmas.
Okay, cool. And what's next, Al?
Okay, we've spoken previously about so we're going to a mining company now. This is a mining resource company that we've spoken about, and of course, Justin, I know you're familiar with these guys. ECR Minerals is the company, and ECR has a portfolio of assets in Australia. There have been a number of developments for the company. The company has assets in the Victoria region, which is southern Australia, in Queensland, and it also has it's identified from its previous activities a series of tax losses, which there could potentially be up to 75 million in tax losses if the company, which the company has actually put across to a data room in order to resell to existing parties, so or interested parties. So that process is underway. Both Nick Tulloch and Nick Tulloch in particular has spent time in Australia earlier this year and was engaged in a number of meetings to address that issue. So there's approximately 75 million Australian dollars of unutilized tax losses incurred through previous operations over the past few years. But on the 10th of September, the company announced an update across its projects, and it wasn't just on one project. It was encompassing 4 different projects. So the exploration team are currently up in Queensland. They are working on a project called the Lulworth project, and the last 2 years has seen the field team there working across various license or various geological anomalies in the license areas, and they've identified now some key target areas. One of those is appropriately named Uncle Terry's prospect, and they've identified a 75.6 grams per ton gold chip there as part of a wider collection of samples. The company is also going to be commencing a drilling program at the Tambo Gold Project, and Tambo's in eastern Victoria. Some work was done at the Duke of Cornwall prospect there, which the company identified a number of gold samples and other samples. That's going to be followed up. They've got drill targets there now, which are going to be going to the ground in the coming weeks. We've heard previously from the company about Baillieston. That's also central Victoria, and Baillieston is very close to the Sunday Creek project, which is being drilled by an ASX listed company, and they've found some astonishing grades down there. But there are also a number of companies mining antimony in the region, and they've identified a major antimony resource at Baillieston. They've lodged a drilling application to follow up on some of the early results. Now, from a commercial standpoint, if you're at 5 or 6% antimony, that looks pretty good. They've identified a prospect which contains up to 32% antimony. So that's extremely exciting. It's also geologically in line with some of the other projects underway in the area. So we're going to hear more from that, obviously, when the drill goes into the ground. Then back to Queensland, the company's also been engaged in another project in the southern area of Queensland called the Blue Mountain Project. There are results expected there. The company's been undertaking trenching and sampling work. They've identified a number of gold samples, lots of visible gold identified there, and the results of that enhanced gold recovery process are due in the coming weeks also. So there's an awful lot to come from the company. We were discussing funding just now, Justin, of course, funding for these companies. ECR Minerals had a number of assets. It had several drill rigs and plant. One of the drill rigs, which was a new rig, was sold at the start of this year, and the company's getting a monthly income of some 30 odd thousand Australian dollars from the sale of that asset. They came to an agreement with the company to sell that, so the company's generating cash flow. It has cash in the bank. It's fully funded for its exploration activities this year. And as I say, with those those tax losses set to be utilised, the company's in a pretty good position financially. In terms of share price, the shares currently trading 0.23p, giving the company a market cap of just 4.2 million. We're getting towards the year lows again now, so I think with the progress they made this year and the work and the results that are about to come, I think ECR is well worth a look.
Yeah, it's just hard work for exploration, loss-making companies at the moment. It is hand-to-mouth stuff. You you've got to try and raise money when you can, haven't you? So it's hard work, isn't it?
It's hard work, but they've managed that process well this year. As I say, with selling the plant, getting cash in from the plant. They also have, you may recall this, just they had two properties. They sold one of the properties up in Nagambie, Rushworth Road. They have a property at Creswick, and that property they've applied for planning permission to build a property there. And, as over here, if you have a piece of land and that land has a permission to build a property, then the land is worth more. So that process is underway at the moment. So there's going to be a further $500,000 or so from the sale of that property when it takes place. So again, that'll be further cash into the company. Again, investors can take comfort and reassurance from that in terms of bolstering the company's cash position.
Well, do your research, everyone. It's the chart is not compelling at the moment, is it? It's hard work there. Yeah, I just think profitable companies where it's at now at the moment until interest rates come down quite a bit and the market starts to rally. It's just hard work. Exploration, loss-making companies. It's a struggle. I mean, look at that. Just look at the chart there.
Yeah, it has been. It's been hard for a lot of companies in the sector. There's no doubt about it. But I mean, we're seeing a very strong gold price at the moment. So if those gold discoveries come to fruition, then of course that's going to bolster the share price.
Marvelous stuff. Okay, Hal, what do you think? The Fed end this week, they reckon there could be half of 1 percentage point or a quarter. What do you reckon they're going for? Half or a quarter?
I think they'll probably go for a quarter. I think the moves have to be cautious because, again, quarter, are they being too cautious? A half, are they being too bold and optimistic? I would say a quarter is the right way, and I think with anything like this, when you're changing the narrative, because that does mark a sea change. We've been in this rising interest rate environment now for some time. If that signals the first turn by the Fed or another turn by the Fed, then great, we're heading in the right direction. But baby steps is the watchword here, and I think that's the move the US Fed will take. I could be wrong, but I believe that will be the outcome.
Yeah. Well, there are certain fields now swaying towards half a percentage point. I'd be surprised if they do that, like you say, because to me, that's almost like them saying we know something the market doesn't, and they've only ever done that when there's been sort of something wrong with the economy. And it's also, in my mind, an admission of failure because they were late to raise rates. And now, if they do half a percentage point, which is only normally done in extreme circumstances, they're saying we're late again.
It indicates they're behind the curve, which will shake confidence further still in in the existing government, and of course, that will have political ramifications for the outcome of the election too. So, I think it's going to be a cautious 0.25%, but let's wait and see.
Yeah, Wednesday, I think about 7 p.m. I think it's our time. Marvelous stuff. Cheers for that, Al. Speak to you next week.
Cheers, Just. Speak next week.